Okay, it's December 5th, 2016, about 11 o'clock at night, day after the Italian thing with Renzi or whatever happened, just as a time mark. I want to talk a little bit about trying to fade what's been going on in the markets here. Seems like the idea of trying to fade stocks here because they're overdone, they've gone up too far too fast without a pullback and all that, seems to be the thing a lot of people want to try and do. And I totally disagree with it. I just think there's better ways to do it, which I'll talk about. And first of all, there are arguments here that stocks are, that this market is not great. The first one is I always like the Hang Seng to lead the U.S. market, and it quite simply hasn't been doing that. You look at the monthly chart; it's nowhere near highs. You go back. This market hasn't seen highs since early September. It's almost like a Dow theory thing. That should be leading. It's not. The other thing should be leading is the Nasdaq. The more higher beta stock should be leading a market higher, in my view. And I don't even need to show you a chart, but you know that the Nasdaq has simply not been leading. Another bearish sign to me. Positioning wise, they're long Dow. Okay, no question about it. They're long Russell, massively long Russell, right? No, which they should be, but no question about it. S&P, they're nowhere. It's just neutral. And look, if you look, they're actually a little short, but nothing really out of whack there. And Nasdaq, they were long back here at the highs, and they've gotten out of a lot of those. They're still a little long, but to me, this is why the Nasdaq has underperformed. By the way, you can argue the Trump fundamental trade all you want. This is where they were massively long. This is what has underperformed in this latest rally. So there's some positioning argument that you should be short too. My problem here is the tape just hasn't really confirmed it just yet. And that's not to say it's not a day or two away, but we haven't had any kind of market rejecting good news whatsoever. The market just gone straight up. Good news, bad news, no news, the market just goes up. To me, you need a rejection of good news to tell you that the tape is bad. And we just haven't gotten that yet, and that's not to say they can't just go down. Bad news could come out, it could go down, but I think what that'll do, the bad news, it'll get people selling it quickly, and there'll be an opportunity to buy it in a few weeks if that happens. But until we get some kind of news rejection, some kind of tape rejection of good news, I'm not really that comfortable shorting stocks here. But if you do want to play what could be a turn here, because there's a lot of different positioning things going on that are all kind of lining up, I would prefer to play bonds, right? 30 years. This is the commercials, which is the opposite of speculative. This is how long they are. So the longest they've been since over here. 10 years, same thing. I mean, look at this. They're massively short 10 years here. And 5 years too, for that matter. Massively short 5 years here, right? Which they haven't been since, here. So, and it's a little bit easier to see in these charts. I mean, look at this 10-year positioning. This is the commercials, which is, again, the opposite of the speculators. I'd rather be long bonds. And you talk about a contrarian trade. Buying bonds here, it's insane, right? You're a macro trader. Go in and tell your boss you're loading up on bonds here. And, you better not lose. Good luck explaining losing money on that one. But, I think you can buy like the 10 years, for example, versus the low of this Italian referendum thing, which is really only half a point away. You're risking half a point, and if it ends up being right, you can make 5-6 points. That's good risk reward. I'd much rather do that. And on a similar note is the dollar. It's essentially the same trade, but look at how long they are in dollars here. You want to know why, the euro or the dollar, first went up on this Renzi crap and then went straight down? To me, this is why. The market is massively long dollars. And there's the sell on news thing. And there's a piece of tape that looks good. And actually the top was on a nice reversal day here, but it was sort of confirmed last night. And the Swiss is where they're loaded the most. Here it is. Look how short these guys are. Swiss. The last time they were short this much was here. We had a 5% move in 10 days. And the time before that was here, right? This is when they were less. They were short the Swiss, and you had that intervention trade in January 2015. So I'd rather do it that way. I'd rather be short dollar, with the Swiss being the place I would do it. And the third thing you can try and do rather than short stocks is try and sell some of these commodities. Copper. I mean, these guys are out of control long copper, and again, this is better seen here. Look at how long these guys are copper, man. Look at how short they were back in June, and look at how long they are now. Back in June, they're short. Now they're long. We had a nice reversal day here, tested it, failed, had a reversal day on that day. The problem clearly with copper is that it's dominated by these Chinese commodity traders that are going crazy trading the metals now. They seem to pick an asset class for a while and they go for it, and getting in the way of 1 billion Chinese trading copper is a little bit tough. I mean, I look at the how copper trades at night. It's crazy how liquid it is and how active it is. It's 11:30, it's 11:15 at night, and this stuff is ripping all over the place, with tons of liquidity. It's the Chinese traders. So it's tough to get in the way of those guys, but I still think shorting copper is a better trade than shorting stocks from a risk-reward point of view. And there's a couple other ones too. Cotton. Look how long these guys are cotton. They were massively long over here, right? Got a nice reversal day here. It's lower now than it was there, and they're longer now. It's a rarity. Usually they'll get less long as the market goes down. Here they've gotten more long as the market's gone down. That's pretty dangerous. I'd be short cotton here too. So those are the way I would rather play, picking a turn here and trying this hero turn trade here. I'd much rather be long bonds, short dollar, short some of these commodities than short stocks. And just a side note, and there's no positioning here to back this stuff up. I have no axe really in energies here, but all I hear now all day is how people's favorite sectors is energy. I mean, these guys hated energy back in the early part of the year, right? These energy companies were going out of business, and now suddenly we're in December, 11 months later, and these guys all talk about how energy is their favorite sector. That's going to be the outperformer. These are the same people who the whole first half of the year said, buy high dividend stocks and safe stocks and this and that, and those things just have underperformed ridiculously. And now the same people are saying overweight energy stocks. Stay away from that trade is my only advice. I got no data to back that up. It's just a feel based on the same morons that are always wrong that this is their favorite trade now. So stay away from that trade, okay? And that's really my view these days. So good luck with everything, and I'll do another one of these when there seems to be something else of interest.